Hi everyone, welcome back to Be Rich. Arun has a couple of questions and I thought I'll get these done. I've recorded these videos a little early. So if some breaking news has happened and you're wondering why me and Arun haven't spoken about such earth-shattering news that has like the market has cratered this Friday or this Thursday, it's because I've recorded these videos ahead and I'll get to it when I get back. So I'm sorry about that. Other than that, I have some interesting answers for Arun's questions. He's got some great questions today, which are timeless and classic, as I always say. And I'll try and get through to them and help Arun understand them. In the process, I hope you also gather some knowledge, or at least you find it entertaining to watch us trying to figure it out. Yes, Arun, what do we have today?
Sir, I have articles from newspapers. So the first article is India SME launches $100 million second fund. So I need to know what is second.
Yeah, second fund is nothing but they're launching another fund.
Okay.
First, India SME Investments is a private equity firm. First, you must know what a private equity is.
Okay.
This is a part of a world which you and me will never be part of, at least now. Maybe in the near future, when you have made lots of money, you will be part of it. I don't have enough length of runway, as Anand says, to make this kind of money where I'll be playing in private equity.
Okay.
Private equity is the oldest form of investing. This is before the stock market. This goes back to the way back in the days when Europeans, explorers will set off to the continent.
Around 15th century, 16th century.
Yes, 13th, 14th centuries. Okay. This is way back when they would set out on an adventure trying to reach Asia, India, China to do trade. So they'll have to launch a ship, sail the ship across Africa, around Africa, and Cape of Good Hope, get to the Arabian Sea, come to India, then bounce around India, then go to China, buy the goods there, and on the way back, pick up some more goods in India, and then make it all the way back to Europe and sell it in Europe. This whole thing is a unknown because there was no maps, there's no satellites, there's no telecommunications.
So they'll be using magnetic compasses.
Not even magnetic, stars. Okay. There's something called a sextant. It's called sextant. Okay. A sextant will be like you have a telescope and there are different parts to it where you can see the angle. And you'll see the angle of the star and you can measure the sky. Okay. Based on that, those measurements and the map, whatever map they have, they will navigate. This is way back then. So this is a perilous journey. There's no guarantee of the ship going, it coming back. So the explorer himself, like Christopher Columbus, anyone you want to take, when he starts out, will have no money. But he'll have the idea. Because you need a brave guy to be stupid enough to do this adventure. Not everybody will want to do it. You don't see every kid going around doing a wheelie in a motorcycle. So there'll be one brave guy. Or a bunch of businessmen will find one idiot who wants to be brave.
They'll make him convince him.
Or he himself will go convince the business people. Either way it works. You've seen many movies like this. So then what will happen is these rich guys will get together. They'll say, okay, we'll give you the money for you to go to India and China. You bring back the goods. Right? We will give you so much percentage profit for you and your crew. The rest will be ours. We will sell it and we will make profit. So everybody makes profit. So to put that money, they'll form like a company. But it's not really a company. It's more like equity, an agreement between all these business people.
Where all the rich people will
Yeah, all these rich people will get together and each one will put so much money and so much percentage. It'll all be negotiated and split. The same concept as what? Now fast forward.
India SME.
Equity. So there's private equity. There'll be one guy who has the vision to where to invest in India. Which small cap companies or this, because SME is small cap, which small industries I can I know these places. So he'll go, a bunch of rich guys sitting in Europe and US, they do not know where to invest in India. They want to invest. They want to make money. They know India is right now growing, so they want to make money, but they don't know where. So this guy will go tell them, don't worry. I know.
Okay.
Right? You give me your money, I'll go invest for you. I'll make so much profit for you. Out of that, if I make profit, you give me so much. So the rich guys who can afford to take a gamble, not you and me, because we only have little money. They would not even be interested. So someone has $100 million, we'll give him a couple of $1 million to go play. That's how these private equities come and they invest. So they've already run one fund. Okay, he's collected corpus like this and he's invested it here and there and it's done well. So the article says. And now he's launching a second one.
So does that mean If they find a company, they will put a notice like that.
No. This works the other way around. So he's already had some first success. So now he's putting out in the market saying, I'm launching a second fund. So people who are interested in joining my fund can join.
So based on the amount, they will not choose a company?
No, they will not choose a company based on the amount. They will choose a company based on returns on the investment.
Okay.
So let's say a company has not gone public offering. It's not gone IPO. Like you have Amazon. It wasn't a public limited company. Long time before it got listed, it was a private.
Okay.
So a lot of private people held Amazon. When it went public, all the people who privately held it sold their shares and took the profit. So that's how you make profit in private equity. So they'll go invest in companies which have potential to become an IPO. Right? So once that company is launched into an IPO, they'll take their money out. That's what they're trying to do in Byju's. That's what they're trying to do in Ola. That's what they're trying to do in so many other companies in India. Zomato, when it went IPO successfully, the investors sold out. That Mama Earth one was there, they sold out and they moved. Same thing, there are companies in India trying to go from private to public. So private equity people can pull their money out of it.
So it's beginning of the IPO. The company
before the IPO. This is more like someone who's got a great idea but needs money. All great ideas finally need money to become successful business. So you have people with money who do not know who has good ideas, and you have people with good ideas who don't have money. So a private equity player acts like a bridge. That manager, that investment guy acts as a bridge between the guys who have the money and the people who need the money. And in a good, efficient method, he's supposed to funnel it. But what happens in most cases is, this guy will either be duping these guys, or they'll be duping these guys, or both will be duping each other, and all three will be working together trying to dupe the public. Right? End of the day, the biggest bakra is the public. Because they'll put newspaper like this, articles and everything, and build it up. Yes, I made $500 billion out of nothing. Like they put on all these stories on Instagram, show you baller life and him going driving on Lamborghini, getting down and then saying I work in India. Whatever. So build up the brand. So then after that, the public has so much exposure to him, that noise, then you have FOMO. Once you start having FOMO, then the job is done. The lamb is ready for slaughter. Because then you don't know. Whatever, that's why everyone message. Sir, this IPO I want to apply. Sir, this IPO I must apply. I'm like, don't. We don't know anything.
They're frequently exposed to the news. They don't want to miss out on that.
Yes. Because they saw that killing. So many private equity guys made so much money. It was no business.
So they would have started 5 to 6 years back.
Correct. And now it is valuation of so many $1 billion. Then they'll tell you Warren Buffett's company is invested in this. It won't be Warren Buffett directly put his own money in it. He would have put some money somewhere. Or he might have bought another company which has invested in this. But they will not show it like that in the news. They'll tell the news as if like Warren Buffett is invested.
Investing in that company.
His company is invested. That means if Warren Buffett is value investor is investing, then what are you saying, man? You would have done no due diligence. You're a fool. You're missing an opportunity here. So then what happens? You feel bad. Then you want to apply IPO.
So how does it differ from venture capitalists and this one?
It's about the same. But private equity doesn't only do like this. They also do in companies. Venture capitalists are looking for ventures. The name itself tells you. Private equity, they do this, and they can also take money and put in something like an ITC. They can take money and put it in. They put large chunks. They place bets. So venture capitalists, like I said, they invest. The first thing what I was saying, guy who has an idea and this. Private equity can also invest there, but private equity mostly prefer companies which have become a little more established. So they can invest on both.
So they invest in the company, they invest on the founder.
Venture capitalist only does absolute seedlings, putting seeds. That's what. A private equity is like buying a tree which is going to bear fruits. Meaning the venture capitalist has put the money. Right? So the venture capitalist Bakra, what he's looking for the Bakra is the private equity. So when he's handling it over, when he wants to exit venture capitalist, he'll try and pass it on to a private equity. When the private equity wants to exist, he'll pass it on to the public.
That becomes the IPO.
Correct. So this is basically what that second fund is. They're launching. They've done one successful first fund, so they're saying. Because they're not mandated to really share their information, how they made, what they made. It's not like it's regulated by SEBI. So it's very different. It's not like a balance sheet is out there and you can see. So it's all very cloak and dagger. So you have to take a guess. And for someone like you, me, we are not even in that realm. So this is more trying to create FOMO in us.
Okay.
So you read articles like this, you feel left out. You feel bad. You're like, oh, I'm not so rich to do this. So next opportunity, they'll tell you this is a multi-bagger. You can also become finally one crorepati.
So that time we'll have the money. Without thinking, we'll put the money.
Yeah. So basically, this is noise, which you can tend to ignore.
Okay.
Hope you guys found that interesting, that video about what private equity is, what is venture capitalists, and how it works, and how they pass the buck from one to the other. Yes, it is a pessimistic view to think that everything is a loss making, but do realize this is how capitalism works. All your Amazons and all your Microsofts, all of them have gone through this and they became successful companies. The problem is, for every Amazon and a Microsoft which becomes successful, there are hundreds and thousands which fail. And to be smart, to know which one will become the Microsoft or the Amazon is the trick. And to play that field takes a lot of courage and tenacity to make that kind of money. Anyway, thanks for watching the video, guys. We'll see you in the next one very soon. Bye.